Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Well, today we had a continuation of the move down with further change in the larger time frame. As you can see in the monthly chart, we are approaching now in just a matter of a couple of days the low of the previous 4-month range. Uh, it seems to be that the destination is the 2700 area, which was also the August June low. And well, on the weekly, of course, we have taken all the previous weeks lows. Daily, we're strongly one time framing lower. And the interesting thing, we can see the extent of the aggressiveness of the move because today we gapped lower. The gap was pretty massive, 30 handles. But not only that, we opened and we drove lower and closed near the low of the day, which in total more than what 100, yeah, around 190, something like that handles, and that's a very aggressive move. If you consider that the overnight was net short with this massive gap, and then we move in a straight line, that's pretty impressive. So yeah, when you have a move like this, gapping, and another strong move like this, um, the risk is getting high for the shorts, but it's very difficult to uh, get against this thing. Obviously, all the time frames point down. Uh, the risk could be getting a little bit high for the short side, given that the market is moving almost on a straight line, so a correction could be due. But again, it's a dangerous business trying to call that bottom. I'll give a little bit more detail of these clusters over here on the market profile, and that's why I zoom it out because it's the only way I can fit it on the screen. So we gap lower and immediately tackle all this. This was a cluster. Remember, if you remember correctly, there was a consecutive 6 poor lows, out of which 3 were standing. All of them were taken today, and we head towards the 2856 area where we had a little gap there that was taken as well, and then we continue lower, and at the end of the day we took the June 6th low and left a little bit of excess and settled around that. Now I'm gonna zoom in to mention a couple of interesting things. If we open it up, you can see that through the day you have the strong push, yes, but then on the period you have a little bit of backing and filling. When you had this type of backing and filling, and it is considered considerably big, is 73 to 77, so a few handles right there, and then you start going back to the low with the excess that was left on the C period, and you take it. The odds are good that you're taking it. Now when the F period, sorry this is really small, but it is so extensive that it's difficult to fit it on the screen. The F low stopped just below, just before the key level. That leaves a unreliable structure. Then on G, obviously, you continue lower and you form the distribution that did this 3-bar back and forth. That's a lot of backing and filling if you consider. So the point I want to make is that early in the session, after a big push, you had backing and filling. Then after another big push, you have more backing and filling. And I think that's the reason why the move was sustained, because with that amount of backing and filling and not even challenging the trend, you have enough inventory balance to continue lower. Now, of course, we know after such a move so extent, you had some responsive buying and people closing positions, collecting profit, and so on. So you had a big bounce. But the interesting thing for me is that it couldn't reach halfback. Sellers step in again, and by the close, you were very near, well, relatively near to the low of the day, although you left excess. So it is very interesting. The focus for tomorrow will be, it's very difficult to say it is on the afternoon range, because the afternoon range is what is 51 to 20, it's more than 30 handles. So it's very extensive. Now, what I would say is that the focus should be on the afternoon low, which is at 28, 27.50. If you start to get acceptance below that level, you will erase this excess left for the day, and that increases the odds that you will continue lower. On the other hand, if you fail to stay in this area and you start doing acceptance here, that will increase the odds that the market will at least is finding some balance in this region. Now, there's a further comment that I want to make. Normally on the briefing, I don't have the overnight profile open because I don't consider it when doing the regular trading hours assessment. But today, the overnight opened with a gap and immediately drove lower. So at some point, we were trading at 27.80. That is around 40 handles below the low of today. And that's extreme. That's just extreme. If you look at the daily, trading around here, that will create a situation where you have almost 100 handles move and then another 40 to open. So from an odd point of view, can the market continue lower? Yes, absolutely. But I thought to myself, what are the odds that tomorrow, after a straight line on the overnight, a straight line on the session, and 40 handles, 30 handles, gap lower, what are the odds that we open with another 40 gap below? So I'm just mentioning that because of myself. I said the odds were pretty low, and when we were trading here, I took a little long position, which paid off really well. That doesn't mean that can happen. I mean, it can continue lower, but we always say base your analysis on the odds, and I think the odds-based risk for the short side was extremely high with another 40 handle gap. This is the type of thing that I'm constantly paying attention to. Anyway, now so far the overnight inventory is net short, and it's very difficult for the overnight inventory to balance because with all this business being done so far, you need to now push it above and inside the key region. It can be done, but there's a lot of business to be done. We will have a closer look at that in the morning. But as I said, anything can happen. The odds are that I would say to focus on this area for the opening because it's a very psychological level, the 2800, and it's not that far. It's only 20 handles. So probably you will get if you get a gap, you will get a gap in this region, an open in this region. The healthy thing for the market to happen is that we don't gap lower, but we try to further consolidate this region and see what's going on. But be careful, the volatility is extremely high. If you are in a position to reduce the size you're trading, I would recommend it so, because you don't need a big position if you catch a good trade to make a lot of money.